All right, up next, we will be closing out with the final panel, which is left to the last bit for a reason. It is the highlight with a feature on Finnish family offices and the impact that they bring, moderated by one of our sponsors as well, Tessie. Annie, over to you, Annie. Yes.
Perfect. People can hear me. So good to have you all here. My name is Enni Rautio, and I come from Tessie. And today's topic is Finnish family offices' impact on venture. But prior that, a quick market overlook how the Finnish venture capital market has developed over the years. The first ARCTIC15 seminar was held in 2011. And this is what the market looked like back then. We were having few venture funds, few growth funds, and only few generalistics. Today's market outlook look completely different. We have so many new funds which have joined to the market, specialists into those sector-specific areas. And the last panelist told that the fund amounts are quite small. I'm so happy to announce that we have now, I would say, 5 venture funds who have now been able to raise over 100 million euro funds. And I'm hoping that those amounts will increase in the future. Also, we have now so many new venture funds also internationalizing their businesses and building teams across the Nordics. Of course, when you have new funds coming in, the capital that the actual Finnish companies have been raising has increased also. This parameter shows also the amount of money that has come from the international investors as well. But as you can see, that the buyout money has been over the years pretty stable, but the growth of those amounts has really come from the growth and the venture segment. But how well those funds have been performing? Well, Tessie is doing annually return study for the whole Finnish private equity market and publishing it. And here is a sneak peek on the venture fund side. So vintages 2009 and 2015 all pooled together have already paid 1.5 DPI for the investors. And we still see that there is valuation on the table and hoping that the funds will realize those in the upcoming years. But when you put these returns into the landscape in whole Europe, I'm super happy to show this slide that in the European landscape, especially in the TVPI scene, more than half of the Finnish funds are in top quartile funds. So I think in Finland we are having many reasons to be proud of. But who are the investors taking advantages of these returns? In the venture capital space, the private investors, which also includes the family offices, are the largest investor group investing into funds in Finland at this moment. Of course, over the years, we are hoping that more and more international family offices would also like to benefit these returns and this ecosystem growth. But without further ado, we have 3 different family offices present in here, and I would like to start introducing them, who we have here, and then getting their point of view, why they have decided to enter to the market, and how they outlook the whole industry. So, in here, next to me, I have Salla Pöyry, who serves as a chair for the family-owned investment company Procurator and manages the company's Swedish investments. Next to Salla, we have Kim Group, who is the co-founder and managing partner at First Fellow Partners, private investment firm co-founded together with Risto Siilasmaa. And then, last but not least, Katariina Helaniemi from Illusion Group, where she holds a position of Head of Impact. And I would like to start asking all of you, when did you start investing in venture? Is it a new thing, or did you do it already back in 2011?
Should I start?
Yeah.
Thank you,
Yes,
Annie. So we're a company based 1991, and we're founded by an entrepreneur with a strong engineering background. So truth is, we've always done investments into what would be called venture, but we called it differently. So we did, before my time, we had direct investments into technology companies. And we used to, one of the KPIs was what's the technological balance sheet of an investment. This is like going to mid-90s. So we've always done investments into venture, but our first venture fund investment was 99, and I had to look it up. But even then, we used the term technology fund.
Great. How about you, Kim?
Well, first of all, thank you for the opportunity to be here. Together with Risto, first of all, First Fellow Partners, many of you may not have heard of us. We're kind of an odd investment vehicle. So it's a two-person private investment company. Started as a family office, and it kind of moved, we become kind of not a family office, but a kind of virtual fund without external money and investing our own money. But together with Risto, we've actually now, this the year, I think 15th year we've been doing this. So prior to that, both of us, more heavily Risto made personal investments, but now for the last 15 years been doing investments. And I don't think we call it even investments. It's more about backing or supporting the investors. And due to our kind of structure, we don't have the LP commitment. And given that it takes more than 5 years or 10 years to build a company, I think the model that we've set up has allowed us as well to be more supportive than having the kind of the approach of an investor, where you would eventually need to take a value extraction kind of a mindset at some point. How do I get a return on my money?
Cool. Pleasure to be here. Hello, everyone. As Annie mentioned, I work with the Illusion Family Office, which is the family office originally of Ilkka Paananen, who is the co-founder and CEO of Supercell. Illusion was started in 2014, 15, and that's already when we started making venture investments. The original idea behind the whole thing was that Ilkka realized that, hey, I have the ability to actually support the funds that invested in me or invested in Supercell at the time. So that's where it started, and recently we've had the ability to also co-invest more and more with other founders from Volt and Zalando and founders of companies like these. So yes, not from 2011, but almost 10 years already.
Well, many family offices has different kind of allocation buckets. How large is your venture allocation as a whole, and does it include like companies and funds both? And how do you combine between those two?
Thanks. So I would imagine between the three, we're probably of the more conservative nature, despite a history in technology and engineering. So we have around 5% as like pure VC funds. We do co-investments in direct, but that's less than a percentage. And we're very local. So rather than being, when it comes to VC, that's where we, rather than be like miles wide and inches deep, we very much stay to the Nordics.
If I continue from that, in the past we've done a handful of investments in as an LP, but I would say that primary focus is actually doing direct investments. But we're very open to doing LP investments because I think it's still about an ecosystem game. So we do a lot of co-investments, obviously with other family offices, other VCs. But we also see that the LPs have an important role and the funds. So I think have done investments even with the LPs, some of these pension funds in some of our more later stage companies.
Yeah, this is a nice spectrum because for us, funds are the main thing. Venture in general is we like to say the crown jewel, the one where we focus on because of course, our background and the history from tech side and Supercell and all these companies. So funds are very much our core. We also do direct investments, but mostly as co-investments with the funds where we are LPs. So that's usually the case. We never lead the rounds. We work with the funds with whom we're already partnering, and then when there are great cases where the help of Ilkka or others might be needed, then we can be part of investing directly as well. But as said, venture is very much our focus area.
Well, how about, I know that there is plenty GPs also in the room. Are you making new investment this year? Because as many of us know, the fundraising market has been a bit tricky over the past few years because there hasn't been that much DPI from the further funds, and some of the, especially the private investors, has decreased their allocation and tickets that they deploy. Are you planning to allocate more capital this year?
We're all the time allocating, but mostly on existing partners. So what we do is we have ideally very long-term partners, and then when we go with them, then we try and tend to be with them for years and years and for several vintages. So yes, we are. Unfortunately, not that much for new fund partners. However, on the climate side, we are always there. The portfolio is still newer or less mature. And then we have more allocation in the coming years also for maybe some new partners. So that's where we are more open. But on the general side, we pretty much at the moment have our allocation full from current partners.
I think time will tell, but if I may, talk on behalf of Risto, he's at least last year taken a position that we wouldn't really necessarily look at doing new LP fund investments as an LP, but more focus on the direct investments. I think one of the reasons is that obviously we still have limited, capital, and we've invested in so many companies. I think we now have active 38. On average, we invest at least 2-3 million per company over the life cycle. From starting point of 200K to largest individual ticket is actually 15 million. So our commitment and deployment and capital we have already deployed is quite big. So with that in mind, and given what Risto took as a position last year, time will tell. But I don't think we would necessarily do new LP investments.
Well, we're on the lines of what Katarina said as well. So we see ourselves in general as being a very relationship-based investor, not just when it comes to funds, but in general. That's how we source. That's also one of the reasons why, especially when it comes to VC, why we like to be local is the fact that just finding, validating investors, having networks, being able to, with a small team, do a due diligence which makes us comfortable with being long-term, makes us local, but that also means we really value our relationships. And where we have done a new investment this year is one where we've been before in the previous vintage. But otherwise, we've been a bit cautious, but so no new investments. But on a positive note, when it comes to our VC investments, they are top performing in terms of with current marks. That is where we've seen the highest returns. So it's not that we're in no way not returning or making new commitments, but it's just a bit cautious this year.
Well, thinking about the market in Finland, I assume that many of you still invest in the Nordics or abroad. How are you combining within your own portfolio how the Finnish managers are performing comparing the others?
I don't know if we have the broadest, especially when it comes to VC. So growth, we have Finland and Sweden. VC is actually we have, but we try to when it comes to doing fund investments, we prefer them not to be overlapping. So we do like the idea of having also a Finnish team that can do investments outside of Finland, i.e. with the sort of specialist focus. But in terms of maturity, our best performing fund is Finnish and exclusively Finnish in terms of, I guess they've had a bit of the same idea of this is the market we know best type of strategy. But we don't, to be honest, we don't have such a broad spectrum that we could compare tens or hundreds of funds. But they have performed well.
We have a very, very broad spectrum, and I would say that the Finnish funds are performing very well. We wouldn't necessarily be investing in them if they were not. Our geography is very, very global, mostly from the US and Europe, but also from other parts of the world, and the Finnish funds where we are LPs, they have to be also performing in the top quartile to be there. So that's good news for the Finns. Yeah.
And I think, referring to the numbers you showed on the DPIs, I think there's always these outliers, and the few funds that we're invested in, I think there are at least a couple of that have higher DPIs than the average is shown here. And obviously, some of these funds have several vintages, several funds raised during, obviously different kind of time periods. But I think it's always also outliers between the funds. So there are managers who have performed well, and it's about luck, style lines, and it's about market conditions. And it's not about the LPs or the GPs. It's about, I think, the quality of the entrepreneurial kind of community and what has happened. I think there's a transformational change during the course of the last 8 years, even 10 years, I would say. So I think those who have vintages that have invested at reasonable prices during the last 8 years are in a good track or have been able to perhaps even get realized DPI cash returns.
Well, many of you have mentioned that you have really nailed the GP selection, that there has been really, really good performing funds in your portfolio. What are the factors that you emphasize during the evaluation, the different investment opportunities? What are the key factors if there are some family offices now thinking about, I should really start to dig in and also building venture portfolio of my own? Any tips for the audience?
I think there are things that are general for all funds, and then there are some industry-specific things. We've been lately doing, or the new funds that we've been doing have most been on the climate field. And I think the same applies to generalist funds, but it's been interesting that it actually comes down to two things, at least for me. It comes down to the team, and the team being diverse enough, not just in terms of gender or other things, but just that the members of the team are actually complementary to each other. But then, the clarity of the thesis is actually very important in a sector-specific fund, we feel. That if you actually really understand what it is that you're looking for, what is that you would not invest in, and why is this needed in the world, then you're already quite far and able to actually find companies that would fit the thesis. And then if this is something that we believe in, and they can be with high integrity, and of course intelligent people can actually prove us that this is something that is needed and this is something where the world is going to, and they have the background and the team to support this, then I think you're already pretty far. And then of course there are other things that need to fall into place, but those are some things that I would find very relevant.
Go ahead.
No, go ahead.
Well, we're slightly sort of continuing on that. We're very mindful about the fact that we're always investing in people. And it's not just when it comes to funds, it's when it comes to companies, when it comes to even more mature companies, management team, that's really the focus and alignment. So, but this means that we also really like kind of the soft, or the sort of core of where we're able to invest on a Nordic, Finnish, Swedish area, is that the funds, they're not, as already previously discussed, they're not, it's not about maximizing assets under management. You really have that sort of aligned interest often in place. And then we like to also think about the fact that where can we contribute to the ecosystem? So, as also previously discussed, if you're an international manager or capital allocator, then investing into the Finnish ecosystem is not always obvious, because these are sort of, in comparison to a lot of other fund investments, they require quite a lot of time, and they can be sort of quite require more administration. So for us, we think about we can contribute here. So we don't mind, for instance, investing into first-time teams. We can do that. But we're very mindful of then track and performance. So really then understanding each profile in the team. What have you done before? What was your contribution? What was your accountability? And then as mentioned also previously, being local, then also trying to understand what are our validating references. if not other investors, then companies, preferably actually that these people have worked with. So really sort of coming in from a lot of different perspectives and trying to really utilize the fact that we are local, since that is our benefit here.
Yeah, I mean, thanks for giving me time to think about the answer. I mean, it was actually, it's kind of, I was kind of thinking about the various decisions regarding investments in the past, and I think for us it has very seldom been about thinking about the kind of the financial returns. I think there's twofold. One is that as regards to the Finnish funds, it's about the team and their likelihood of making a dent into the local society. It's kind of a vague statement, but it's still based on the assumption that if the team makes great investments, they're going to be able to generate great return, tax impact, etc. But it's still about building and the team having the obsession actually to succeed, supporting the companies. So you could actually build a community of great companies, and I think that's really has many times been the key thing when we're trying to qualify, and that many times means that it's not GP is pushing for early exit that could give early DPIs, but it's about going after taking more risk and actually building something bigger where they kind of risk their carried interest as well to some extent. And then the second dimension maybe on these international managers, many times it's about if there's a international VC that has a Finnish manager carrying the Finnish flag to some extent, then we would kind of look at that as well. Hey, it would be nice to be able to somehow have a touch point. So those are kind of two kind of angles we've looked in the past.
Has there been any big challenges or surprises during the years that you have been investing into funds?
Well, I guess just a big challenge, definitely challenges. So I said that we made our first investment into, it was a Dutch VC, this was before my time, 99. And then we came back in 2016. So we were away for a while. And I think one of these big challenges was, and my personal background is, I'm a financial economist and also sort of done research, have a PhD. So we like to use data, and we like to sort of at least sort of say that we did our due diligence and we based this on some data as well. And when we came back, that was a big challenge, obviously, because fund cycles are so long. And we tried to dig, like, is there data? Like, is this, how well do they perform? And ultimately, we did end up doing, and did a positive decision based on just forward-looking belief, which we in our other investment classes don't traditionally do. So that was one sort of, we had to overcome, change our methodology a bit there. And then I guess in comparison with our other asset classes, obviously venture investing is laborious. So when I think about our direct investments or our co-investments, the time consumed in comparison to many other mature investments, and that also involves actually our VC funds. They tend to be more laborious than other investments. But it's that labor has brought fruit as well, so they have performed. But those two, if not surprises, then we've learned.
Well, yes, I agree. There have been many challenges, several surprises as well. But actually, I think what is a big part of it is actually building a family office or building that side. That might not always be visible for the LPs or for the funds or for the direct investments, but which is also part of the deal, because sometimes you just have to take turns. You thought that you were investing or focusing on something, and then at some point you realize that this is not feasible for us, or we're actually not doing this, and you still have to manage all the investments. So I wouldn't say it's a surprise, but it's also a learning experience. And maybe in the Nordics, even if we have older families that have been there for a long time, and we already have several tech entrepreneurs who have their family offices, it's still somewhat of a new concept here. So I would say that building that thing has been giving us some surprises and some challenges. When it comes to funds and venture investing, I think that's part of the deal, that there will always be surprises. You never have guaranteed returns, or you'll never know what you're gonna get. But it takes work, so that I wouldn't consider as a surprise. It's more part of the deal. But I think maybe for the family offices or the people maybe thinking of starting one in their room, I would say that there will be surprises in structuring the organization and understanding what you want to invest in. So the better you can think it from early on to realize what is important to you, or where you have the competitive advantage based on your business or something. So that makes it easier, maybe a bit fewer challenges.
I think from looking from the direct investments, obviously, I think any GP knows that it's one of the worst asset classes to invest in, because you need to actually feel passionate about who you kind of partner with when you do an investment. And I said earlier, it on average probably takes 10 years, so it's a long race. But in terms of challenges, I think it's also about mindset. I mean, obviously it's. And I think the key is for you as well. I mean, it's building up the organization and the team and the support, and how kind of foresee the various situations, engaging with the fund managers, co-investor LPs or family offices, or then other partners. So it's about foreseeing the situation and being able to kind of react whenever situations happen. I think that's one of the key challenges, at least we're so involved in so many things. So just being not a kind of a dragging force, but actually being able to support and react when needed.
Well, if there is GPs or the target companies presented in the audience, how would you like to be approached by them? Thinking about raising their next funds or funding rounds?
I mean, just give a call, send an email, WhatsApp message. I mean, whatever. I mean,
can we run to the stage now?
Absolutely. Yeah. I think it's not about necessarily it's not about necessarily us being the right even LP. I mean, are we the one that would be eligible to invest? But it's still about building the ecosystem. I think as an LP, you also benefit if there are, because in the end, if you look at direct investments, there are different funds eventually that are going to invest in the best companies. So it may be that we invest in totally 3 different funds, but we're still incentivized and aligned with the kind of the ambitions we have. So I think it's trying to help others, even though you wouldn't invest in those funds either. So, but yeah, reach out, please.
Yeah, I think that's the tricky part. Whoa. That's the tricky part with fundraising. I think the better you understand the fit already in advance, the better chances you have of getting funding and finding the right partner that is ideally not just money, but something that is even more valuable in addition to the money. What makes it tricky is that many family offices or other private capital allocators don't have very public websites or places where they share things about them. But the more you're able to do the legwork or the discussions, understand the community, maybe discuss with some family offices to understand who might be the perfect fit for you, I would say that's the best thing one can do, instead of just shooting thousands of emails to potential LPs, because then when you find the right ones, they have the incentive to have the conversations. Yeah, and when it comes to us, as said, like, we don't currently have allocation for generalist funds, but for the climate ones, we might have in the future. So, yeah.
Fully agree. Also, what we try to sort of, to the extent practically manageable, we try to interact, because I think the most interesting part of investing is the fact that you get to learn and you get to see so much. Obviously, practical limitations apply, but also when something is not necessarily either not timely for us or not an optimal fit, we try to connect dots or see where we can contribute to the ecosystem and to partners around us. That's one thing. And then another thing, I guess, as a non-regulated family investment fund, we do leave a little room for crazy. And by that I mean that we're not sort of strictly, we have an investment plan, we have allocations, But we're also, I think one of the strengths is that we can be fairly nimble. We can think fast. We try to be structured and disciplined, but there's always that slight room where we can do things a bit differently. Also going to the back to the point that we could invest in a first-time fund or to something which is not entirely standard. So that's something where we really try to also, when somebody approaches us, does this make sense? If it's us, why would we be the correct investor or the good investor here?
Well, many thanks. It seems that our time is up, but I want to thank you a lot for being present. Thank you.